So, welcome everybody. Thank you for joining this session. So I'll just give you a quick intro to why we're talking about investment banking today, and then of course we'll dive straight in to hear from the people who really know the subject. So financial institutions are still really in the early stages of unlocking the trillions needed for sustainable finance, for sustainable development, and of course for the net zero targets. And also to redeploy the trillions, they're still we're really at the beginning. So I think by 2050, they'll be looking back at this time as really a turning point. I mean, just you've heard the trillions, so they say that the information is that 10 trillion is needed just for developing countries, for the climate goals and for sustainable development. But of course, there's also the 486 plus trillion in global financial assets that need to be aligned with the Sustainable Development Goals and with the Paris Agreement. So this is really the beginning of an enormous opportunity for financial markets. Investment banks play a central role, of course, in financial markets, facilitating the allocation of capital between investors and corporates, providing liquidity to global markets, and of course advising corporates, governments, and investors. So they really have a key role influencing the economy and helping to allocate and contribute to the allocation of capital towards climate action and the transition to a sustainable economy. And so recognizing this to help advance integration of sustainability into investment banking, UNEP has been working with the Principles for Responsible Investment through our investment leadership program to develop a roadmap for sustainability integration in investment banking. So we'll be publishing that later this year. The roadmap, just as a kind of preview, the roadmap really looks at what is the landscape of current market practice for sustainability in investment banking. What are some of the leading practices? It looks at some of the unique challenges that the industry faces, and also, of course, the opportunities for more integration of sustainability into investment banking. And of course, we come up with recommendations which will really look at how can we catalyze the role of investment banking in contributing to the sustainability transition. So this is really about the economic transformation needed and how investment banks can contribute to this in much more scale and speed than has been done in the past. So to help us explore some of these ideas, we have Pablo Pérez-Montero González, who's the Global Head of Sustainable Finance and ESG Advisory, Corporate and Investment Banking at CaixaBank. Nathalie Jaubert, Deputy Head of Corporate Social Responsibility at BNP Paribas. And Lucas Arangüena, who is Global Head of Green Finance and Head of ESG Solutions in Corporate and Investment Banking at Santander. So my first question to Pablo, our analysis has found that investment banking has really shown different maturity across different parts of the investment banking sector. And this is really depends on the type of investment banking activities that from the interviews it showed some were more advanced than others for different types of transactions. So is this something really that you've seen in CaixaBank and across the investment banking industry? And if it is, then how can investment banks really address these differences?
Hello, everyone. Thank you very much, Liesel, for the introduction. It's a big pleasure for me and for our institution, CaixaBank, to be placed here, sharing with you this floor and this panel with this top professional. And congratulations for the events to UNEP that are advancing really well today. The sustainability have been placed in the center of our dialogue in terms of a strategy with our clients in the last years. And that's mean that practically all companies that have the aim to lead their sectors need to put the sustainability in the center of the strategy. And in CaixaBank, the first approach obviously was very based on the sustainable finance activity. At the beginning, because historically we had a strong position in renewables, social infrastructure finance, and all the corporate lending activity. And in 2020, we found a new area with some specific teams in order to support the different business areas in CIB that are involved in the front office activity with the clients. No? We begin for the structured finance teams and activity, advancing with all the corporate financing, and at the end covering all the transactional banking products. Our aim at the beginning, that we execute completely at the end of 2021, was to cover all the products that CIB are offering to their clients, lending and bonds. Based on this activity, we finished 2022. Just a quick overview about numbers, with more than 20 billion in a year in direct lending, in more than 200 deals in 11 countries, and becoming one of the reference in Europe and globally in sustainable financing, ranked as third bank in Europe in sustainable finance and first in green financing. Based on all this dialogue with the clients, we realized that the big corporates demands more from our side than just to be a financer. And based on this experience, we thought that the better approach to be present in this process of involve the sustainability in this strategy from our clients is to create an ESG advisory team. And under the same umbrella in CIB, create a specific service that cover different things about the concerns and necessities that from our clients. Our aim at the beginning, or the purpose, is to be perceived by our clients that more than a financer, we would like to be a strategic partner of our clients. The solution for this purpose will be covered by a specific methodology that we found at the beginning based on the Unified and Cambridge Leadership Engagement Guide, and covering 5 main pillars or areas of specialty. ESG strategy at the beginning, first point, probably the most open and the most strategic. At this point, we cover things like helping them to design ESG objectives, goals, reporting, EU taxonomy, communication, or adherence to global standards. Second, net zero impact. We have the aim to cover all the necessities that our clients have in terms of defined measure or fix the objective in terms of decarbonization at the first step, water footprint in the second step, and impact in biodiversity, third step. The third point that we found at the end of 2022 was ESG rating advisory, and a specific way and methodology to help our clients to improve their visibility in front of the market, using or improving their rankings in ratings, indexes, and certifications. The fourth point was sustainable financing frameworks. That is the natural point to drive our clients to the side of business, to the sustainable finance side, helping them to build a tailor-made frameworks in order to organize all the financing side of the company. And lastly, the fifth point was about clean technologies. Help our clients to have a better understanding, or to understand how the clean technologies like hydrogen, carbon capture, renewable, of course, could impact in their activity, in their value purpose, and helping them to build their project or the objectives belongs to that. In this process, we begin with a diagnosis and cite a mandate and a specific mandate with our clients. And after this point, we deep in this analysis in order to prioritize what we can to do and to fix a calendar with the client in order to walk this way. And always helping them, not as a consultancy, always as a complement to help them to have a better understanding that what are their problems and what are their necessities, and to drive them, and sometimes, a lot of times, link with a specialist outside our company, like consultancies, agencies, specialists, softwares, fintechs, etc., that are working around this activity, helping our clients to resolve their problems. And at the end, just to conclude with this point, today we are advising 35 companies, big corporates that are leading their own sectors with different things in different levels of maturity. Some of these advisories have been published in different milestones that they achieve, and others are obviously confidential. But at the end, we perceive like that the relationship and the engagement with our corporate and institutional clients was improved very, very much with this activity.
Thank you. That sounds like a pretty broad and systematic approach to addressing clients' needs. And it does reflect some of our findings that investment banking professionals said that they are seeing growing demand for advice on managing sustainability in their organizations from investment banks. So, Nathalie, is this what you're seeing in the market, and how is BNP Paribas supporting investment banking clients?
Yes, one of the questions we have the most often is, how do I compare to my peers? So that's kind of funny, because that's what we do all the time, compare ourselves to our peers. But our clients have the exact same question. And accompany our client in their sustainability journey means first understanding what they're doing, understanding where they stand. So for that, really develop a tool, an internal tool that we call the ESG assessment, but I'm sure that the name will change over time. But the idea is to assess clients on 5 branches: 2 on environment, climate and biodiversity, 2 around human rights, health and safety and community impact, and 1 that we call business ethics. It's basically everything that didn't fit in the first 4. And the idea of having this question, those questionnaires are sector-based. And this was a very important discussion among us. We wanted to have something comparable, but on the other hand, beginning those discussions and supporting our client, it was very clear that they need to be comparable around their own industry, own sector. And we had to develop units, criteria, really specific. One of the good examples you could have is we are members of the Net Zero Banking Alliance. And as you can see, each sector, we do have our own, we have a specific scenario, which is industry-based, and the unit we're using is also industry-based. I think that having this discussion really needs to be articulated around what are the main questions from the client themselves. That sounds very basic, but for us, one of the very big challenge was internal training and internal knowledge. So we had all those bankers, all very, basically not all, but most of them very interested in ESG. But the difficulty for us was really to go from general discussion to something specific. So we tried several things, but finally we decided to internalize this training question, and we have what we call our Sustainability Academy. It's an internal small school where we defined several levels. So there is a need to know for everybody in the bank, and then depending where you stand, if you have direct contact with a client, if you have specific question, you will have training more or less in depth. You could have something very specific, I don't know, on hydrogen or an electricity market, or something maybe broader on what kind of rating, how to improve ratings. It took us quite a while to put that together, and one of the difficulties is that things change very quickly. We had panel discussion this morning around regulation. For clients, this regulation questions are key. They want to know how they can report, how we will see them. They have understood that we need their reporting to fuel our reporting. So we need also to have our relationship manager really aware of what's going on regulation, which is not the easiest part, to be honest. Then we had to set targets. So at the beginning in the bank, all this sustainability question was really around risk. Our first tool was sector policy, where we wanted to reduce the risk and try to understand where we do not want to go. And the transformation now is to move from not going somewhere and reducing risk to developing positive solution. And for that, we also had to develop new KPIs, because talking to a relationship manager, telling them you should reduce something doesn't make them very enthusiastic. So if we want to keep the momentum, we need to develop positive KPIs, once again, align with their direct business. So we now publish, for example, our fossil fuel exposure, but also our low carbon exposure. And as for now, we will always publish both. The idea really being to demonstrate the shift and not only focus on the brown part of what we're doing. We have developed also KPIs that are probably smaller on a business line by business line basics. We've been talking a lot about the trillions here, but in fact, within BNP Paribas, talking about the trillions didn't help us really to implement things. It's nice to have the global dynamic, but then going back to your business and P&L, probably people need something a bit more operational, so we had to divide that. Finally, we also get an internal reorganization. We create in the investment banking what we call the low carbon transition group. Those are people coming from different business in the bank, mainly structured finance. And the idea was really to use what they know, meaning structuring finance and financing deals, into new technology and new kind of risk. So going from project finance to financing, I don't know, hydrogen or batteries. Now, today it's 150 people. The target is to go to 250 people, which is probably more challenging than what we thought at the beginning, because you have to have both knowledge, the technical one from the bank, but also the ESG one. And I kind of come back to this training issue, but having this low carbon transition group ready means also improving everybody's knowledge. The idea is also to have internally startup analysis. What kind of technical solution could be brought to our client? This can be in new technology, but also in things as simple as energy efficiency. For example, we do finance one company which helps clients to identify where they can have gain in energy efficiency. That sounds, once again, super simple. You have sensor everywhere and you do an analysis. And this kind of back and forth between technical solution and financial solution, for us, it was probably one of the key to develop really these low carbon solutions.
Thank you. So this really sounds like part of culture change and really talent development to get the skills in place. So Lucas, in larger banking groups, how do you see the role of investment banking in ESG sustainability strategies? How much is it really a priority area when we hear a lot about the loan book and changing the loan books? And what is the role of investment banking in helping to bring sustainability into the culture of a bank?
Right. Well, thank you so much for inviting Santander to this panel. I think it's a great question, right? What is the role of investment bank within the wider organization to help drive the sustainability agenda, right? And when you think about large financial institutions, they typically have three priorities when it comes to sustainability. The first one is decarbonizing their scope 3, i.e. their own loan book. The second one, and it was alluded to earlier, is really helping your own clients achieve their environmental targets. And the third one is around risk management, right? This is going to be a whole new world, and you need to understand what are the transition and physical risks. Those are kind of the three areas. Then you have a fourth one that is not explicit to financial institutions. I think it applies to most companies across Europe. That is decarbonizing your own operations. And when you look at the first three that I just mentioned, I think the investment banks typically, at least in most European institutions, play a massive role in driving the sustainability agenda, right? So when you think about decarbonization of your own loan book, right? Maybe I bring it to the specifics of Santander. And when you look at the public commitments that we've made on what sectors we're going to decarbonize and what the intermediate targets by 2030, all those sectors are related to CIB. We're talking about the large, hard-to-abate, high-polluting sectors like oil and gas, power, cement, steel. All those are typically CIB clients by nature because they are the largest ones. And decarbonization is very much, you find CIB very much at the forefront of the decarbonization agenda. The second pillar that I think is very dear to most financial institutions is how can you become the partner of choice of your clients to help them achieve their environmental targets. I think this is of the utmost priority, and this is where we're developing know-how, and you see, training staff, and so on and so forth. And it's logical that investment banks, they play a very preeminent role in that regard, in sophisticating the client offering, because we deal with the most complex and sophisticated clients. So if you want to be helpful, you need to make sure that you bring some alpha onto the table. You bring some value added. So I'll give you, within the investment bank, I'll give you just a note around the 5 areas that we've developed, right? The first one is sustainable finance. That's very obvious. You know, this energy transition is going to be first and foremost a capex intensive. We're talking about trillions of dollars. We need to make sure that the entire CIB portfolio can be green, from bonds to loans, but not only, right? Derivatives. We're talking about trade finance. You need to greenify the entire portfolio. And even on that logic, when you think about the targets like institutions like Santander have out there on how many billions we want to mobilize by 2025, for example, in the case of Santander, that's 120 billion to be mobilized by 2025. Those targets are exclusive to the CIB unit, right? So we are the ones that are saying, yes, we're going to mobilize loads of capital within the investment bank, and the other areas are not there. The second area that we've developed is when you think about the energy transition, if you want to decarbonize the economy, it means we'll need to deploy a new set of technologies, right? And here we're talking about hydrogen, we're talking about batteries, we're talking about biofuels, we're talking about clean mobility, carbon capture, we're talking about food tech that is responsible for 20% of global greenhouse gas emissions. For us, it's very important because we finance a lot of protein producers in the Amazon forest. So what we've put together is a team of dedicated experts, corporate finance experts that understand the technology, understand the engineering, and as a result of that, Santander has advised in some of the most transformational transactions across the space, particularly in hydrogen and batteries, and we are very busy, and food tech, and we're very busy in all other sectors. And this is really driving the strategy of your clients. This is help them acquire companies, acquire technologies, acquire know-how. The third area that we've developed within the investment bank that is a spearhead to the rest of the bank, so a product that can be distributed across the entire bank, is the voluntary carbon market desk, whereby we develop our own proprietary high-quality, high-integrity carbon offsets. A lot of our clients are in the path to decarbonizing their own operations, but they also want to offset the residual emissions. And we want to be a high-quality, high-integrity provider of voluntary carbon markets. The fourth one is around advisory. Pablo developed on this. I'm not going to comment on sustainability ratings and so on and so forth. But it's typically the most sophisticated clients that deserve the most sophisticated advisory services. So those are typically areas that are developed within the investment bank and then are exported into other areas of the bank. We wanted to take it one step further, actually. We acquired a company called Way Carbon that specializes in providing advisory services on decarbonization targets. They can even help you assess what is, as a client, what is their physical risk, right? And that's the other area that we've developed as well. Our clients are asking us, what is my physical risk, right? I've got plants in different parts of the world. Even physical risk can apply also to pure green clients, by the way. These can be clients that have wind farms or solar plants, and they say, what are the risks that I'm exposed to? And because we developed those technologies within the investment bank to assess our own risk, now we can help our clients understand these are the different risks you're exposed to. So all in all, we developed those 5 areas to support clients. And now what we've seen is that this is not just exclusive to CIB clients, to the largest clients of the banks. This applies to all the large corporates and SMEs as well. So we are now, or we've been for some time, kind of exporting all that know-how and all those product capabilities onto other areas of the bank. We believe so deeply in this within Santander that is the same person driving that sustainability agenda, not sustainability agenda, but the sustainability business within the investment bank is the same person driving that sustainability business within the retail and commercial bank, and that's me. But it's not by accident or by coincidence, it's because there are plenty of synergies when you actually, combine the two of those. Even we've set up within the investment bank an area that we call ESG factories, whereby we address our large clients, so the S&P 500, and we try to partner together to sell a bundled solution to our 164 million retail clients, right? So when you think about, offering residential solar panel solutions, right? You need to partner with someone. We've actually structured all that process of identifying the right partner, selecting the right partner, building those partnerships, and developing those globally, right? So you can even think about going one step beyond and manufacture products for the retail and commercial banks. So I think, all in all, I'd say those financial institutions that will probably score the best in their sustainability agendas are those that are being smart enough to leverage the know-how and the expertise that is being developed within the investment bank and push it to the rest of the organization. And then there are synergies all the other way around, of course, right?
Yeah, thank you. I think that's quite an interesting concept of the investment banking services being an incubation space for sustainability to then roll it out to other parts of the bank. We've also heard to some extent around targets, and of course, we have also heard that target setting in investment banking can be challenging, especially if you're looking at net zero and the impact side of things. Pablo, could you tell us more about how you see this in CaixaBank and how do you address these challenges?
Of course, that's one of the biggest questions, the typical question that we were going to do in the absence of reference or clear rules around the sustainability. In the last years, the sustainability evolves very quickly, fundamentally based on two big pressures: the regulation in one hand, and mostly in Europe, and the demands of the markets and from the clients and the stakeholders in general, in the other hand. At the end, CaixaBank at the beginning of this reflection, when we was building our position in this world, we use one of the main things that the bank have from the very beginning, that it's to have in depth the sustainability in our ADN from the beginning. CaixaBank is the social bank, and we belong to a big foundation, CaixaBank Foundation, and at the end of our activity, there are the purpose to do or to generate social impact. Based on this big purpose, we define a path internally that covers three main points: to prepare internally the organization, to comply with the regulation and the demands came from the market. Second, to involve the sustainability in the top strategy of the bank. And in 2022, as I mentioned and earlier today, our president, CaixaBank, published the new strategy plan with 3 pillars. One of those goes around the sustainability, the value purpose that the bank would like to offer around the sustainability, with the aim to be a reference in sustainability in the next 3 years. And third, to define a proposal in front of our clients that cover all their necessity and concerns, with the final end or aim to give them capacities and solutions to resolve the problems. The big or the most important milestone that we cover internally in this time was to design policies and a big governance to canalize all this activity, to participate in global work groups and forums like this one, and Geneva is a very good example that how we can share knowledge and capacities, to launch a strategic plan that involves the sustainability in the center with different objectives, some of those really important for our business activity, like to mobilize 64 billion in 3 years in direct sustainable financing, that we covered the half of this period with a very good percentage of achieve, more than 60%, and the objectives that we fix around the Net Zero Banking Alliance, big goal that the bank and the big banks would like to achieve in the next years. and probably one of the most difficult and challenging things that we are fronting. And manage all the risk became from the sustainability aspects as one of the main risks that are around the organization, to measure, to manage, and to prepare the organization to front this risk. And lastly, to surround around the market, that what are doing our competitors, what are demanding our clients, and what are thinking our regulators about the future of sustainability. In the other hand, we think that in absence of clear rules, certain reference that are happening or developing certain roles in the market are really important. If we talk about risk, probably a TCFD is one of the main pillars of reference. If we talk about business or lending, LMA or ICMA. If we talk about alliances and objectives that we fix to become in this alliance, Net Zero Banking Alliance, as I mentioned, are probably in principles for responsible banking the main dose. And lastly, to prepare or to involve all of these aspects in our value proposition in front of the clients. And these are practically the goals that we fixed at the beginning. We are probably fronting a change of paradigm in terms of how we can develop our business. And in absence of clear rules, our purpose or our positioning is to follow the big reference or standards that are happening and developing in the market.
Thank you. So you mentioned the absence of clear rules, and of course, apart from green bond standards or sustainability bond standards, there is still a lack of consistent methodologies across the investment banking industry. So Nathalie, is there anything you would add to how BNP Paribas is going about setting or implementing targets in that absence, specifically in the investment banking part of the business, and also what do you see as what do you need from regulators and other stakeholders for investment banking to really accelerate the transition in the real economy?
So I do agree that in the absence of clear rule, we've got to create something. So the choice we make was to be very explicit about our own rules. So for example, when publishing our net zero target, we have been developing at length the methodology, what kind of data we use, what kind of input we use, is it drawn, undrawn, committed, uncommitted. So sometimes we do have the feeling reading our own paper that it's a bit too long, but on the other hand, we are very interested in reading other people's paper just to understand why with the same question we came with such different number at the end. My guess is that if we keep publishing and being transparent around our hypothesis, probably something will emerge and we will converge around common understanding. The question of drawn, undrawn, committed, uncommitted, I think it's a good question. It's super basic, every banker understands, but we all had different choices. So, and it will converge for sure. I'm not sure we need a kind of regulation on that. Being transparent and comparing notes may be a first very good step. Nevertheless, we need to have rules, and if we do have rules, we need them to be stable. For us, the worst thing would be to have to recalculate with other input, other data, and having something not comparable to one year to another. What our investors are asking us is not necessarily where do we stand in terms of absolute value, but what is the journey? Where do we stand in terms of dynamic? So for that, we really need consistency over time. From other stakeholders, I think we need clear political rules, and we also need a societal change. Banks are key in the economy, but if the way we consume, the way we travel, the way we function in our day-to-day life doesn't change, then it will be hard to reach the net zero. So that's, I think we should, even though it's not our direct decision, we do need this political role. What is on our side is probably to help clients discuss and be part of industry group. We found it very useful working with people in the aviation sector, shipping, or power, or oil and gas. Sometimes discussion is not that easy from the beginning because you've got to step in something very specific, but we found it very useful to understand what kind of scenario they use, what does it mean exactly, what kind of technical change they expected, in what is the reason that sounds reasonable to them. So I think we do need those industry groups, but we also need to be part of them and be an active stakeholder around that. Maybe another thing is we do need to help technical change it. We will need both societal and technical changes. In BNP Paribas, we do have an envelope for small companies in order to really understand what kind of technology could emerge. But we also need to support research and to support those entrepreneurs who try new technologies. So we do have a big part to play, but we are definitely not the only one, I guess.
Mm-hmm. Thank you. I mean, you mentioned technology. Of course, that's been raised earlier today in technology supply and demand in the real economy. But of course, there's also the role of technology in investment banking and banking generally. So, Lucas, how have you been seeing investment banks using technology specifically to support the sustainability efforts and solutions?
Sure. So I think everyone has been deploying technology at the scale over the last few years, and I don't think this is going to stop in the coming years. I can give you a hint and a glimpse into how Santander is thinking about deploying technology for driving our sustainability agenda. I think there are two ways to look into this. One is the technology that we use for our own purposes, which is primarily reporting and risk management. And then there is a very interesting area that is how can we deploy technology to provide better solutions at scale for our clients within the investment bank. So when you think about our own operations, the reporting and the risk management side, I think on the reporting pretty much every bank have been, there are massive undertakings in terms of the data we need to collect and how we need to report it to the regulators and the different stakeholders. So no one can achieve that within an investment bank without deploying technology. And that's very much adjacent to the existing control systems of the bank. What's interesting is going from that into really start managing your own risks, right? So we are, for example, using technology for monitoring purposes, right? I'll give you one example. Again, we are a large financier of protein producers in the Amazon forest. We use satellite imaging to monitor that what our clients are saying they're doing is actually true in terms of deforestations, right? For example. The other example I can give you is we have 13 types of physical risk within the investment bank. We've partnered with an insurance company to assess, monitor, and manage those 13 physical risks, either at asset level or at portfolio level. And obviously, in order to assess physical risk, you need plenty of technology and data to achieve that. And then on the other bucket, right, on how can we deploy technology to provide more insightful and sophisticated solutions to our clients, I think that's the most interesting and exciting piece. We've developed the ability to draw data from our clients' ERP. That's the holy grail of our clients' data. And we do that for three purposes. One, we can help them do their own reporting, because they also need to do the reporting, and we provide them with the IT tools so they don't need to deploy more human capital against it. They just have the systems in place. The second one is we can help them with that data. We can help them measure their CO2 footprint. So we tell them, this is your CO2 footprint, and not only that, but these are the sensitivities, and you're cheapest to deliver. These are the key actions that can drive decarbonization faster or cheaper. And then the third one is around measuring their own physical risk, right? So again, clients having plants in different parts of the world, and us being able to assess for them the physical risk. We're also using technology at the scale in our voluntary carbon market desk, because you need to create solid and credible baselines, for example, on decarbonization or around soil regeneration. And for that, you need plenty of technology as well. A lot of that is done via satellite or via InSight samples. And we're also being very busy in deploying technology particularly in the trade finance assets. So our clients are asking, listen, this is all great, but we need solutions to decarbonize my supply chain. And because we are deeply embedded through supply chain finance programs in our clients' supply chain, if you deploy technology, you can ensure the traceability. You can also create with a bespoke set of KPIs. You can develop incentive-based structures whereby you're incentivizing your suppliers to decarbonize and providing them financial benefits as a buyer, better financial terms in terms of financing their operations. So I think we are early days into how we learning to deploy technology. What I tell the big bosses in the bank is don't think this IT budget is going to go down. It's only going to go up. So I advise everyone to make sure you ring fence a solid IT budget because there is a lot that we'll need to deliver in the coming days, either internally or for client purposes.
Thank you. So I think we do have a bit of time for questions if anyone in the audience has questions. I just have, okay, we'll do that and then we'll come back to one final question from me. I don't know if we have microphones, so you can have mine.
Thank you. I'll be quick. I think Nathalie. Oh, yes, of course. Sorry. My name is Burçak İnal from the European Banking Federation and partner of UNEP FI. I think, Nathalie, you touched on research for innovation. So my question will be about what's sometimes called eco-innovators, so all the companies out there, especially startups at that startup stage and later on scale-ups, doing important innovation. What is the current state of this market segment in Europe? Is it healthy? And who are their main sources of funding? And, how do banks come into that picture? And that's for you and any of the others. Thank you.
I'm not sure I will be able to answer if it's healthy, but I can explain what we try to do. We do have a specific fund for this kind of startup. So our idea is to be always a minority. We don't want to have the majority of this kind of company. What we want to do is really help them find money elsewhere, leverage the fact that we do due diligence, that we will be sometimes in the board or that we will follow on the growth of the company and really send that as a signal that it's interesting, it's well managed, and we did a full due diligence. So we do have a fund for that, mostly for the environmental part. We also have a small envelope for social. And that's interesting. Tickets are smaller, companies are smaller also, but there are also technology, not only technology in the way tech, data tech, but technology for social impact. And we also think it's important to test that, even though the return is not as high as the one we see in other sectors, such as fintech or low carbon. But we also have a small envelope to really try to understand how social impact can be developed. And for those companies with a lower return, we do have an impact assessment. So the idea is that we do accept a lower return, but on the other hand, we want them to demonstrate that they do have a social impact.
Thanks. Would anyone else like to answer? Lucas?
Sure. I can take that. I think there is still a lot that needs to be done, particularly in Europe, when it comes to funding startups. Yet, I'd say we're seeing some unprecedented, and when I say unprecedented, it's literally unprecedented developments over the last few months. So when you think about companies like, H2GS, this is H2 Green Steel, a Scandinavian company to produce green steel that was only established less than 2 years ago. It raised 1.5 billion euros. Again, this is a startup with a PowerPoint, effectively, and they raised 1.5 billion euros at a pre-money valuation of 1.1 billion. You've got the case of Northvolt, that has raised in the last 5 years 9 billion. Again, another startup to produce batteries. You're going to see another French battery company that very soon will be announcing a capital raise in the zip code of 1 billion euros. this has not happened before in Europe. A lot more needs to happen, that goes without saying, but this is our unprecedented developments in the European market. I can tell you what we're doing in Santander. I think it's a portfolio of initiatives. Within the investment bank, we actually, for the first time, 2 years ago, we started a new product that is called growth debt, whereby we finance negative cash flow companies. Let me tell you, banks don't like financing negative cash flow companies, but a lot of these companies will be burning cash flow. So we've developed that product. We've deployed hundreds of millions already to a well-diversified portfolio of companies across Europe. We've got a VC fund within our asset management that is a 50-50 joint venture with InnoEnergy, the largest investor in climate tech in the world. We actually just invested, it was announced last week, we invested 20 million into InnoEnergy. So we put our own equity into InnoEnergy. And again, this is the most sophisticated early stage investor, at least from our point of view, in Europe. They've got companies spanning from hydrogen to batteries to carbon capture to clean mobility. And we also have a growth fund. We call it fund, but in essence, it's actually part of our own balance sheet. So it's a portfolio initiatives because there is no one size fits all. Every company is at different stages of development. And again, I think people do complain quite a bit that there is not enough financing in Europe. For the most part, I probably agree with that. I think, a lot more needs to be done, but I think we're heading in the right direction. We also see, by the way, member states deploying capital at a very large scale. So some of the companies that I just mentioned, in addition to this equity being raised, there are a few hundred million on top from member state governments, and also the European Investment Bank and the European Investment Fund. Those are very effective ways of deploying capital, and they are very much looking into the energy transition space to deploy their means.
Thank you. Any more questions? So we have one over here and one here.
Hi, my name is Irina Kuzmina, and I'm representing Swedbank here today. I have a question about the competence which all the speakers touched upon today, and I wonder how you're building the industry competence within your teams or organizations, because there are plenty of unknowns with new technologies about the scientific pathways and how to assess them, not to be only scientifically valid, but also credible and realistic. So how did you ensure the industry competence?
Listen, I'd be happy to take that, right? So we've created a team that is called Sustainable Tech with corporate finance practitioners that are experts on 6 technologies, right? As I said before. There is a lot of internal training that goes. There is a lot of talking with a lot of different entities and different bodies. The one thing that we've done in the past is partnering with third-party institutions, right? So we've got 2 well-established, long-standing partnerships with academic institutions that are, and we have pretty much unlimited access to their labs. And whenever an idea comes onto us, then we can soundboard their views, whether that technology is scalable, whether it makes sense, what is the ultimate life cycle CO2 emissions of that. They've been incredibly helpful. Other partner I just mentioned, right, InnoEnergy, we've invested in them, and they understand technology better than no one else because, they are building those businesses. A lot of them, by the way, are spin-offs from academic institutions. So I think you need to do a lot of the internal and hard work. You need to speak with your clients and learn from your clients. I always say that I learned most of what I've learned from my clients directly. But then you need to be very smart at building an ecosystem around you, right? An ecosystem of people that are at the frontier of technology and at the frontier of knowledge that can help you navigate in a very high-speed changing environment.
I do agree. We do have also partnership with a university, and they're very interesting, both in terms of understanding what's going in the industry and also in terms of motivating it and pushing people to ask more questions, because you have that feeling that people are really ahead of you. So the discussion is very useful. Nevertheless, we could have the best scientists. At one point, you have to bet on something, on some technology. You don't know sometimes you don't exactly know which one will be the best one, even though both are sensible in the scientific way. So even though partnership are super important, I'm not sure it's the magic wonder. So, I mean, it doesn't prevent us sometimes from betting on the wrong one, I guess, or learning in really by experience.
And in our case, talking about competence, we think that in an uncertainty world like this one, the solidarity in terms of shared knowledge and capacities is more open than in other spaces from our activity. And we think that those banks, all of ours, are following opportunities to finance new technologies and to be close to our clients in order to support them, no, in their necessities. But at the end, we think that together go longer than in individual movements, and the UNEP and initiative like this one is a very good example about that.
Thank you. Fernando de la Mora with Albert Marcel. We've seen a slowdown in new production of sustainable finance, particularly in markets such as Germany, US, or the Netherlands. Do you think that rising rates is putting pressure on the transition costs for companies to decarbonize? And then as a separate question, what sectors are exceeding your expectations in terms of business volume versus what sectors are not meeting your expectations? Thank you.
Let's begin with the first question. In terms of markets, it is obviously that France, Spain, or Italy goes ahead at the rest of the countries in Europe in terms of volume and probably in evolution in structures of sustainable financing. That's probably something that are based on the historically positioning of their companies and banks, probably the main utilities, and probably the big banks in these countries promoting this kind of financing at the beginning. We think that all the European regulation are probably the most important pressure in terms to improve on to press ahead the sustainable financing solutions, and we would like to be close of our clients, not only in the countries that are already developed, trying to be close of our clients in the markets that have a longer pathway to transcend.
On sector, I should say I don't have an answer at the top of my mind.
I think you meant on geographical. On the second question was more about sectors. What sectors are
exceeding expectations?
Listen, I'll name two, right? One is the battery space, and everything that goes across the entire value chain of the batteries, from producing critical raw materials to refining, to the production of the cells, to the refining of the batteries, particularly in the US. When you think about the 360 billion euro IRA federal program in the US, 75 of that is going just to one sector, and that's battery tech. So what we're seeing is new startups being created, new technologies, spin-offs from academic institutions, and a lot of the Chinese and Korean manufacturers coming in a big way into the US and into Europe to benefit from those subsidies. That is definitely something that no one expected. I mean, think about this. Europe and the US did not produce a single battery in a meaningful way 3 years ago. And now we are deploying, at capital at a scale that is unprecedented. And the other one is hydrogen, particularly in the US, in North America. Not so much in Europe, that I think we're still taking baby steps. the federal subsidy of $3 per kilo in the US is mobilizing a lot of brains and capital into that sector, both on the green hydrogen and the blue hydrogen, and that's going to be massive. We're probably going to see hundreds of billions of FID programs going through FID in 2024 already. So this is happening at a super fast pace.
Thank you. So I have one final question. So apart from investing in IT, what other advice could you give to other investment banks to integrate sustainability practices? And you have 1 minute each, please, Pablo.
Probably the main recommendation is trying to find the opportunity behind the sustainability, to have a proactive position in front of the sustainability and non-reactive. No? Putting this idea in the center, it is important to cover certain milestones internally and externally to cover all this process in a well-done. No? Firstly, to combine all the internal departments and activities like risk, compliance, strategy, human resources, with different office activities, with all business that are creating and offering solution to their clients. No? It is important to have a very good connection between both worlds in order to be very consistent in front of the clients. And lastly, trying to attract the talent, to generate or to improve the talent internally, to generate better skills around the sustainability in the staff in a company, and obviously try to maintain inside the company. And probably with all this mix, the impact is warranted.
Thank you. That's a lot, but Nathalie, is anything you could add to that?
I would say support people when they are curious, because to be efficient, you've got to understand your clients, you've got to find new solutions. So help them try things and support them while developing their knowledge. And the other thing may be have a strong governance, because we will need to have a sustainable effort within the bank for years. So for that, we also need a support from the top and from the management, because we will need to have a long-term effort to really reach the goal.
Thank you. And Lucas.
I'll go very quick. I'll just say the first one is, this is going to be a very complex and certain transition. Think out of the box. Everything is yet to be defined. So follow your own model and try to push yourself to find, to be creative and innovate. And the second one, and for me this is very important, is manage extremely careful your greenwashing risk. I don't want to be doomsday, and I shouldn't be saying this when we're closing the panel on not a very happy note, but I do believe that in a year's time, a lot of financial institutions are going to find themselves in a very difficult spot in the way they've classified transactions, in the way they've managed transactions with clients. And managing the greenwashing risk starts with the first line of defense. You need a very solid second line of defense and third line of defense, and you need to define what risk appetite you want to have in greenwashing risk. We've defined our own risk appetite is 0. It means a lot because you leave business behind. But I think ultimately it will protect the institution, and most importantly, it will protect your clients in a very big way going forward, because we're partners anytime we advise clients or we help them issue bonds in the capital markets. So for me, that would be the thought that I'd leave behind.
Thank you so much. So a lot to take forwards over the next years to extend these practices even further in the industry. So look out for the roadmap, which we'll be publishing in the next few months. And thank you so much. And please join me in thanking our panelists.